Hello and welcome to the first episode of a brand new series called Market Maker Monday. The purpose of creating this new series is to do a weekly recap of the week's trading that we have seen, but also to break down the markets using my analysis, the way I actually view the market, and including ICT's teachings, which are all available from his YouTube channel. So I'd just like to make it clear that the way I actually refer to it is powered by ICT, because by and large I've actually forgotten a lot of my previous teachings, just because a lot of it was actually just rehashed retail garbage, to be honest. And I've done so many different courses, paid and free, and they're an absolute waste of time. I'm actually approaching 7 years trading now with varying degrees of success. And about 12 months ago, I discovered ICT, and I realized at that point that that was what I was missing. And because of the amount of time that I've actually served analyzing the market, I always knew that there was something else going on. And then as slowly as I started to learn more of ICT's teachings, it really started to become clear to me that that is all you need to know. So the topic for discussion this week is going to be multi-time frame analysis, the way that I view the markets, and also a few cardinal rules and a few tips and tricks that I'm going to keep towards the end of the video, just to keep you hooked and hopefully still watching by that point. And I'm going to go into how to label your charts, or at least how I label my charts. And I also want to point out a few key things that I've actually identified. So recapping back to the previous video that I did, which is about 15 days ago now, it's the one previously uploaded to this that includes the 1 hour time frame. And what I'd actually outlined was we've got this bullish order block here where we were actually rejecting the level, and at the time the monthly candle was down here. So what I will do is I'll label this. So a monthly, put a plus there, bullish order block. So we're respecting that level. And if you go into the teachings on ICT's channel, he does actually go into order blocks in detail. So I won't go into it in too much detail here. However, you can see the rejection here. We've actually got a swing low on the monthly time frame. Today's date is the 31st of July, 2022. And with that said, look at the momentum that we've actually got on the monthly candle. So if this actually either into next month actually breaks and closes above this, and then it begins to use this level as support, then that's actually the confirmation of this as a bullish order block. So where you've actually got these down candles here, and we've actually broken through, you can see how we come back to reject or respect these candles here. So this could be that in the making, but until we get that information, we're not actually going to know that that is the case. But I just want to bring your attention to the importance of the open price on June's candle. So 1st of June, the opening price, we rallied up, power of 3, and then we've actually come back down and we've closed in the bottom half of this bearish candle. And if I jump straight to the daily time frame, so that's monthly open and then June. Okay, so if I go to the daily time frame, we've got this here, which is monthly order block. We've got that rejection here, and then we've got the monthly open for June's price here. And then if you take a look at the significance of this, so this would have been here. So we've had a rally up, we've come back down, mitigated this as an order block, and then we've gone down. If you look at the candle there, the body of the candle, that's actually bang on 50%. So if I bring this down here, you've actually got the body of the candle there. And if I was to just remove that, you can see just how we've traded back up now into the mean threshold of this bearish order block. So that's actually going to be really significant. So fast forwarding like to the end of next week, we don't know where this is actually going to go to yet, but what we do know is we are currently at a really good resistance level. We are in a premium here, so use that as the dealing range. We're really high in a premium. We've reached that mean threshold of the bearish order block here. And now what we need to ask ourselves is, going into next week, are we going to trade a little bit lower to fill in some of this imbalance here? Yeah, so that could be an opportunity to buy, or if you're trading a short from here because it presents itself, then this will be one of the first high time frame objectives. So we've got this imbalance here, and we've got the potential of running these highs here. So we've got this high here. So there's going to be liquidity where we currently are. There's also going to be liquidity above these highs. And then also looking left, we have these relative equal highs here. So if we trade above this and we're actually seeing this become support, or maybe we actually come back down to mitigate this Monday or Tuesday, and then we have a reversal on the 1 hour time frame, and we have a setup with a fair value gap to push higher, we'll be looking for this target here and then eventually this target here. And then we've actually also got these imbalances here. So we have this imbalance. Okay, so that will be a sell, fair value gap. And then we also have a lower imbalance here. So I wouldn't be surprised if we actually come up to rebalance some of this. We take all this liquidity, and if we are going to see lower prices, I think that this is going to be the best place to offload all of this sell side liquidity here in the market. So I think from a high time frame perspective, the institutes and everybody else, the smart money, is going to be looking at running the price up here if this breaks, and then into the big massive pool of liquidity here to then see lower objectives. So we have actually seen what retail would see as an inverse head and shoulders here. So you've got your left shoulder, your right shoulder, and then your head. So this is, to me, this is actually looking quite bullish, but there's a lot of talk in the community that follow ICT that is expecting this to go lower. And I'll be honest, I don't really want to second guess that. And that's where my next point comes in. You need to try and identify what the market could potentially do. But then if it doesn't do that, you need to have a fallback plan. So I think we could actually come up to reach higher prices into next week, and then, or we consolidate, push up, then reverse. There's lots of different possibilities, but I also need to ask myself, well, what if we form a swing high here without coming back down into this region? That will give me an opportunity to short. And then if we see a 1 hour reversal here, that would give me confidence to then run price up to here and here. So you need to trade what you think 2, 3, 4 steps ahead of everybody else, but also you need to be really nimble in the market. And this is something that I'm only recently coming to terms with. And when I mean really nimble, you've really got to switch gears. And if you've been keeping up to date with ICT's teachings, you'll see just how quick he can switch gears, which is absolutely phenomenal. There we go. So that's a bit of an insight really into what I think could happen. I've just showed you here. I mean, I don't really keep a lot of the levels on like this. I'll only add them. So if we broke this level, then I'd add these here. And there's no point in me now having this level on, because this is the higher time frame objective. And quite frankly, I clear my charts once or twice a day just to make sure that I get a fresh perspective on the market. So some of the points that I wanted to touch on regarding multi-time frame analysis, the tips, were when I was first starting out, I would have my key levels on the monthly time frame, just as I do here. So I'd have these drawn on, and then I would go down to, say, the daily time frame, the 4-hour time frame, and then I would think, right, okay, so that objective has been hit. So now we need to turn around from here and then come back down if I was expecting lower prices. However, if I go back up to the monthly time frame, you've got, and I use this as an example, you've got your monthly key level here, which is your bullish order block. And where we come to trade back down again, this is a month worth of trading, this candle. So this here is going to be many, many days to form this swing low. So when you come down here, you will, on the lower time frames, have weekly levels that are also going to be key, like this. So these are equal lows here on the weekly time frame. So you've got your bullish time frame, sorry, you've got your monthly time frame key level drawn on. But then the key part is to remember to still have your weekly and your daily key levels in and around that area, because where you've actually got this is 2 weeks worth of trading here, we've only tapped that level once. And on a daily time frame, that would look even more different. So if you go to the daily time frame, here we go. So we've actually just spent 2 days here where we've actually swept the short-term lows here, and then we've created that fair value gap, which has created this bullish move. So my point is, you need your major key levels on the higher time frames, like your monthly and your weekly, and even the daily time frame if you're working on those micro time frames. But you also still need to consider those current time frames that you're viewing for timing your entry, as well as framing your trade. So jump straight to the 1-hour time frame. You can see how these levels are worked on a 1-hour time frame. So you've got your inverted head and shoulders, which is like a retail setup there, but you've also got your intermediate term low here, and then you've got your long-term low, and then you've got your intermediate term low here, which has then created this move up. So this has actually created a bottom on the market on a 1-hour time frame. And hopefully that does actually make sense, because just because we've actually tapped that on the monthly time frame, so if I was to delete that and just leave that monthly key level drawn on, go to the weekly time frame, you can see that the interaction with it here is different to what it appears on the monthly time frame. But on the weekly time frame, it's going to reach for the liquidity that's relevant to that particular time frame. So just because it's actually reached this monthly order block doesn't mean it's going to stop there. It's going to push through that, and then it's going to reach for liquidity that's relevant to that time frame that you are observing price on, because price is actually fractal. And then we go down to the daily time frame, you can see again, so you've actually got those equal lows here, and we've actually come down, we've actually tapped that there, which is it 2? Yeah, 2, and then we've created a higher low before we've gone back to the upside. So I think that actually covers pretty much everything that I wanted to talk about today. It's a little bit light compared to the previous one, but in terms of my bias for the week ahead, it's going to be determined really on where we open the market up tomorrow, or if you're watching this video on Monday when it's released, it will be today. So I'll be keeping an eye on the Monday open. I'll be checking for any gaps, and you should already be au fait with how price works at gap, and it uses it for support and resistance. But I think there's a possibility, if we are expecting higher prices, to come back down and to take this low, rebalance some of this imbalance here, and then create higher prices. And then the higher objective would be here, and then obviously some of this imbalance here. But if we see that this fair value gap is completely closed in, and then price shows a reluctancy to hold at that level, and we actually break the lower boundary of that fair value gap, and then we come back up to retest it, then I will be considering a short down to this imbalance here. And I think you can see where this is going. Then the next level is going to be here. And then below that would be this order block, which actually puts you in a discount again of this range here. We might actually simply just keep this level, trade away from it, and come back down and create like lower prices, and to take these lows down here. And obviously, if that happens, I will be looking to get on side with whatever happens in the market. I am on Twitter as well, and I have got a Telegram channel. So what I would do is I'll put the Telegram link down in the description, and feel free to join. Originally it was going to be solely just for ICT UK members, because that's where we originated from. There's about 8 members in there at the moment of varying degrees of experience, and we're using it to build a community of like-minded individuals, people that are on the same journey and people that are following the same path. Because I don't know if anybody that's listening or watching this has any experience with building a mastermind, but it's important in order to surround yourself with like-minded individuals. And especially in my life, there's just nobody in the flesh, in real life, that lives local to me that even cares about any of this. So I'll leave the link in the description. Please feel free to join in the conversation. Feel free to ask lots of questions and share your analysis and your expectations. And until the next time, I'll speak to you soon. Thank you.